I've seen agents literally default to buying leads to pay the bills now or hit their quotas now, and then literally take out second mortgages on their homes just to be able to buy more leads. It's a very poor way to run your business, and they slowly just burn out, fizzle out, and die over time.
Hey guys, so today's a special video. I'm here meeting with a veteran from the insurance industry. Ryan, if you just want to go ahead and introduce yourself, maybe tell us a bit more about what you do.
Yeah, hey, I'm Ryan Montoya. I was in insurance for 7 years. I recently got out of the business and started my own automations company, but insurance is something that you probably don't hear this often, but insurance is something that I actually do enjoy and I am somewhat passionate about. Maybe not passionate about doing it, but I still like the subject. And so I'm happy to provide any insight I can to how automation the insurance industry, how those two things work together or not.
Awesome. So I guess today's topic is really just about the single thing that's going to kill insurance agencies in 2026. You know, we have AI coming up. We had a bunch of natural disasters happen in recent years. The landscape has just completely shifted. So why not just go ahead and have an interview with someone who's qualified and a professional in this field so we can get some more insight. So let's roll. So Ryan, what do you think is the biggest issue that the insurance industry is facing that you think most agents are unaware of?
Yeah, that's a great question. I think a lot of people are afraid of AI taking jobs. And while AI is going to take a lot of jobs, the issue is not the AI itself, but it's the actual structural changes that are going to come with AI. And what that means is carriers have always been responsible for their appetite, their guidelines, what kind of client they want, what kind of coverage they're going to offer, underwriting teams, etc. And agencies have been responsible for selling and servicing the clients. Now, the issue is, as these carriers start evolving with AI, they're going to use AI to help reduce their margins when they make decisions, and analyze their current client base and see what's working, what's not. However, the agencies are going to have a lot of trouble adapting with AI for a lot of reasons we're going to talk about. But they're going to be left as the buffer, a low margin labor buffer between the carrier and the client. They're going to be stuck doing all the work that AI can't do. And that sounds like a good thing, but the problem is AI can do a lot. The work that AI can't do is dealing with the extremely difficult clients, the very complicated service cases, all the unpleasant work. I mean, not just agencies, but any business knows that when it comes to client, it's 1% of the clients and 1% of the problems that are taking 99% of your time. That's what the agencies are going to be stuck dealing with. And these agencies are going to want to sell, and they're going to want to spend all their time just marketing, selling, and making money, but they're not going to be able to, because all of that marketing and selling is going to get replaced by AI, and the agencies are stuck with that one client that calls you every 3 or 4 days to update their policy because they're worried about their payment. And that's a nightmare, and that's what agencies aren't ready for. And they're going to think, they're thinking right now that, hey, we're still busy, hey, our phones are still ringing, we have activity in our business, but they're confusing activity for growth, and it's not productive activity. And that's what's killing them until one day they're going to wake up and realize they're not making any money anymore, and that AI has changed the way that the industry's been operating, and they're just left in dust.
Awesome. Okay. Yeah, that was great. And so Ryan, back when you were still producing, what trend did you really notice that made you think this is going to destroy agencies that don't adapt to all of the changes happening?
So this is what we saw that is what actually inspired me to pivot into automations, is service load inflating without any kind of compensation increase. So like I said before, the carriers are changing, and then the insurance agencies are still left as that buffer, just taking care of the clients. And like you mentioned before, there's a lot of things that changed the industry. The natural disasters was massive. You know, the fires in California, flooding in Florida, fires in Hawaii. All these natural disasters we've seen over the last few years. Also different trends in the economy and just in civilization as a whole. I mean, one of the big ones was like breaking in, that TikTok trend that was a few years ago where people were breaking into Kias and Hyundais just because they could.
That's crazy.
And without getting all political on you, cost of living's gone up, and everybody can agree on that. So what's happening now is service work is going up exponentially. And it's not random. It's because carriers are changing their risk profiles. And as that happens, people get rate increases. They get underwriting notifications like, hey, if you don't change your roof in the next 5 years, we're going to, not 5 years, 1 year, we're going to cancel your policy. Carriers are exiting states They're narrowing their appetite. They're non-renewing some policies. They're tightening their underwriting guidelines. And every single one of these moves creates more clients saying, hey, I'm looking for new policies. Please reshop. Am I still getting the best rate? And insurance agencies are now, like, I'd say more than 50% of their day are clients coming in saying, hey, my price just went up $700. And then you as the agent have to explain to the client, yeah, that's a good thing because it could have gone up $2,000. No client wants to hear that. So policies are more complex to write and to manage. However, insurance agents are still getting paid the same commission rate. If I'm going to be doing triple the service work, I'd expect to make at least triple the commission percentage, but that's not happening. And that is already difficult to deal with just in the day-to-day operations of business. But the fact that no change has come down the pipeline that I've heard of, at least in any insurance carrier, is indicative to me that the market is no longer favoring insurance agents, and they're not quite being forced out, although that depends on who you're talking to. Even if they're not quite being forced out, it's becoming a less and less viable job. It's no longer a day where you can just write insurance policies for 10 years, then sit on your renewals and retire, because you're going to have to service that book for the rest of your life.
So it's more work, more chaos, same amount of money being paid. While, like, I guess just the cost of living and just the natural disasters, all of that is just adding to the mess.
It's just adding to it more and more. And on top of that, how do you solve that? If you have a book of 10,000 clients and 10 customer service reps, but now the clients are causing triple the work, you're going to hire, and you can hire, and payroll's going to keep rising linearly, but revenue's not going to.
And so if you had to give us a measure of how effective buying leads in today's insurance market is as an agency, as a producer, in comparison to organically, I guess, generating leads and them coming to you without you having to pay for their acquisition, what would you say about that?
So buying leads for any business has never been the optimal way to go. Just strictly from your cost to acquire a client perspective, it's never been the right way to go. And to give you just some kind of framework of how buying leads work, a lot of different ways you can buy leads. One of the most popular ones is if you, Azim, go into a website and you type in best insurance near me, 99% of the websites you're going to find are just lead generation vendors who have really good SEO, and they're going to collect your information, sell it to 10 insurance agents. Each one of these insurance agents buys your lead for, on average, maybe $10 to $20. Then whoever calls you first wins. Whoever gets you on the phone wins. And it's a really bad experience for you as a client because you put in your information and instantly you start getting 20 calls. And it's a horrible experience for the insurance agent too, because you got a 1 in 20 chance of closing that lead before somebody else calls them first and closes it. And that's the cheap leads. I mean, expensive ones can go, if you don't want to compete with other insurance agents, you might be paying $100 to $150 a week. So given that, imagine paying $150 and if the client hangs up in your face, then you just lost $150.
That would sting. Yeah. That would sting.
It's horrible, right? And then you as a client, I mean, maybe you're on this website putting in your information, you're expecting to get back an instant text, not someone cold calling you. So buying leads has never been sustainable, but now it's even worse because think about your average consumer 5 to 7 years ago versus today. 5 to 7 years ago, people were still looking for relationships. People were still, things are a little more traditional. They're more willing to talk to you. Today is TikTok brain. Everybody wants things fast. Everybody wants things right now. So if you as a consumer go online, fill out your information on a lead generation platform, and you don't get an instant response, there's a very high chance you're just going to close out and give up and look for somewhere else for your insurance policy. Let alone you get a call from an insurance agent, and then they're expecting you to go through a 30-minute to a 1 hour, 2 hour process of buying insurance. It's extremely difficult now compared to back then. Now, when it comes to buying leads is never going to be the way. It's even worse today.
Cool.
Yeah.
How are you looking on time here? Because I know it's probably already like 5. Can't see.
You're good. I think my wife's still getting ready. Ashley, baby, if you want to come down and get ready, you can. Just put 7 away. She might have been waiting for us to stop talking. If you want to get ready, you can. Okay, just keep 7 away, please. It's because he's so big and his nails, he goes quick, like when he walked out of the house. Anyway, yeah, what you got next? Let's keep going. Keep chugging, push the top of them.
And so, if an insurance agency isn't buying leads, then what should it really be doing then?
Focusing on inbound leads, no matter what. That's the answer to everything, is consistent inbound leads. And there's a lot of ways to do it. But, as we said before, there's a lot of insurance clients, for a lot of reasons. First of all, it's better to just have inbound leads, people coming to you. But also, there's a lot of insurance clients out there, because everybody needs insurance. And they are not all, this might sound bad, but Your ideal client as an insurance agent is one who trusts you and takes up none of your time. Now, hopefully you're a good insurance agent and don't betray that trust and write them a great policy and they don't need to take up your time. But we can all agree that your perfect client is one that you give them a quote, they say yes, they pay their insurance, and they never bother you again. Because that way you can focus on growth instead of servicing your existing clients. Because you don't make money servicing existing clients. Inbound, and there's a lot of ways to do that. Most of them traditionally were extremely time consuming. Me personally, the way I built my insurance business was referrals. And I probably spent, when I first started out, I probably spent about 80 to 90% of my day reaching out to potential referral sources, realtors, lenders, car dealerships, etc., whining and dining them, and about 10% of my day selling. And even after I became established, a huge amount of my time was spent nurturing these referral sources. Now we can automate that entire process, not the actual, so you got to do that in person, but we can automate your outreach, which shrinks that time drastically. However, if you're going to do that, you must do it now, because if you don't, all of your potential referral sources will be taken by another insurance agent who does automate.
How do you get those referral sources? Like, what is the top way to contact them? Do you just go online and find potential referral partners, or how do you get those referral partners? You don't buy them, do you?
You don't buy them. Who needs insurance? Everybody needs insurance, but who is extremely motivated to get insurance? For me, it was, and this depends on what insurance you're selling, but for me, it was people who are buying houses, need insurance to close on their house, and people who are buying cars. And typically, both of these buyers are extremely motivated to buy these cars and buy these houses, and they want to get their insurance now. Now, on top of that, who else is invested directly in the sale? It would be the person selling the house or the person selling the car. They want to sell their product. Now, typically, there's a good amount of trust already built by a mortgage lender, a realtor, a car salesman, which is why the client's buying a car from them. So those are the people I reached out to. Because, I mean, let's take buying a house, for example. This house we're in now, it took me about 6 months. I worked with my mortgage lender for 6 months on this house. I had a lot of trust in him because he was a huge part of my process. And obviously, if I'm going to trust him with handling the sale of this house to me, I chose him for a reason. So if someone who I trust to that degree enough to handle a massive purchase like a home is going to recommend me a great insurance agent, there's a very high chance I'm just going to go with whatever insurance agent you recommended me to. So you just have to identify who the best candidate is. You know, we're talking referral partners to send you business. And that can be based off their volume, how many they have to send to you, whether or not your personalities align, if they have an interest in what you're selling, and if they have a need. I mean, obviously a mortgage lender or a realtor or a car dealership has a need for me to write their insurance because they want to close. So they have some kind of with them, what's in it for me to refer them business, and that's it. So that's how you find them. Now, you're not going to get these people to refer you business unless you have a good product. Because if they referred me business and I wasn't able to close any of their clients, then that's another issue. It reflects poorly among them, but this is a whole other conversation about how you actually get referral partners, how you get them to send you business. There's a lot of little things that you can do, but it all comes down to how good you are, because at the end of the day, you're a reflection on that.
And like overall, what would you say? What's going to happen with agencies that I guess just don't adapt?
Yeah, so, and this is a lot more than you think, people who won't adapt. Imagine you are running what is basically the picture of success for insurance agencies a few years ago, which is you've been open for 30, 40 years, you have a massive book, 10, 20, $30 million book, you've got a big staff, bunch of customer service reps, and the owner may or may not still be selling, might be hands off, might still be active. Well, suddenly your massive book of clients starts having more and more service issues. A lot of your insurance carriers are non-renewing existing policies, they're leaving the area, your service volume starts spiking. What do? You're going to hire another customer service rep. You're going to hire another one and another one. And revenue is going to keep staying flat and payroll is going to keep going up. And next year, the renewals increase again, more mistakes happen, maybe there's a massive natural disaster. And eventually, your owner is going to sell because they're managing more and more service and they hate service that's taken away from their retirement time. So what would have sold for $3, $5, $10 million, your book, is now going to sell for a lot less Because if you are one of those agencies that didn't adapt, your book is now much lower quality because no insurance company buyer is going to want to buy into a book of business that is full of problems. So not only is your day-to-day operations going to slowly suffocate you, you're going to realize that you're not even able to exit the business for nearly as much as what you originally thought your book was going to be worth.
Makes sense. So it's not. I guess it's an issue with the systems because you're not really doing anything wrong with the clients themselves as much. The systems just don't allow you to service them as well. So yeah, I guess is that where the devaluation of the book comes in?
Yeah, as clients realize that you're no longer the same agency that you used to be, and the issue is not that your insurance company is failing, but it is now unattractive, both to clients and to potential buyers. So you either try to tread water and slowly drown, as your insurance company, what you thought was your retirement vehicle, should take in more and more time, and it slowly loses value, or you can sell, and it won't be worth nearly as much as it used to be.
Makes sense. Okay.
I mean, think of it from the client's perspective, right? When you first started off, you were amazing. You were lightning fast every time they need from you. But naturally, as you start dealing with more and more service, your response rates are going to go down. You're going to slowly burn out. You're going to stop putting as much effort into your existing clients. And everything's dandy with a client until something happens, and it's not. Everything is great until a claim happens. I'm sure a lot of insurance agents have had that before. Everything is wonderful. The client loves you until the claim gets denied. Now you get bad reviews on your website. And the same is going to happen. Everything's great until a client wants you to update their vehicle, and you take 3 weeks to do it because you got too busy and you didn't adapt, and they're starting to complain. Those clients are naturally going to gravitate toward the companies that are fast, that are newer, and your book's slowly going to get replaced by the clients who didn't change, or who also just want a relationship-based business, the problem clients, the ones that AI can't place because they've got a really complicated insurance policy. And then on top of that, let's say you integrate too late. Let's say you integrate not 5 years, more like 1 or 2 years from now. Well, what kind of clients are left in your book? The ones that want you, and they want your time. They don't want to talk to a bot. They want to talk to, even if the bot's amazing, and the bot can do everything you can do, and it's super cordial, super sophisticated, it's super nice. Some people absolutely refuse to work with AI, and they don't like technology, and they only want to deal with people. And those clients are, unfortunately, lots of them, not all of them, but many of them are massive headaches because you can't delegate their work. I mean, most of those clients don't even want to talk to your customer service rep. They want to talk to you. So what happens when you sell your book? Oh, they're not going to want to talk to the new agent. They want to talk to you. What happens if you try to integrate AI too late? They're not used to it. It's a sudden shock. They don't like it. I can't get a hold of my agent anymore, and they bounce. So if you're going to integrate it now. Get your existing clients used to it. While things are good, while things are rosy, while things are dandy, while everybody's still happy with it, do it now. Train your clients not to use you as a single point of contact, because then you become a single point of failure, and integrate while you still can.
And this isn't just something that's unique to insurance, like even though you mentioned that insurance it's a bit archaic, it's not something that's going on only in insurance. I guess just insurance maybe is a bit more delayed, but there's still like the urgency to act right now, I imagine.
Oh, absolutely. Yes, do it now. I mean, purely from a lead generation, let's only look at one small piece of the puzzle, which is cold email lead generation. And let's say you are let's say you're us, trying to sell automations to insurance companies, right? Think of the scale that we can reach out to. We could, when I was doing cold emails back in the day, or cold calls back in the day, 200, 500 a day? I can do 200 to 500 in 10 minutes if I want. Shoot, 1 minute if I want to. It doesn't matter. We can do literally millions in a month. And people are going to get tired of the same generic outreaches. People are going to get tired of, you're going to churn and burn your existing leads. The same thing goes with AI. AI automations and integrating into your current business. Now, some things are going to be okay. The voice AI can be okay. But if you are losing time doing tasks manually, and other companies are not, it's only natural that they're going to take the time that they saved and acquire all your clients.
Yeah, and I guess, they often say that the sky is the limit, but I guess here it might be the mindset is really the limit for insurance agencies here, because they have to go ahead and realize that, hey, we need those systems, whether it's for lead generation, whether it's for fulfilling all of the promises we made, or making service convenient for clients. I guess that's really how I would sum it up. The mind is the limit for them. Mindset, I guess.
Exactly. And a lot of them think that they're too busy. They think that They won't be able to do it for compliance reasons. They haven't thought outside the box. They're just locked in a very old way of doing things. And the fact is, you can do it and be compliant. You're not too busy. You put a little bit of time now, just understanding the system, and then your automations person is going to build the whole thing for you. It's just insurance agents as a whole. They're slow to move. I mean, think about their day-to-day operation. It's the exact same thing over and over. Client comes in, write the policy. When you write a policy, you're filling out the exact same fields over and over. You're asking the exact same question. And then the service cases you get, it's the exact same service cases over and over. People only need X amount of things out of their insurance. It's not exactly a creative industry. It's extremely templated, which makes it ripe for AI. But unfortunately, it also builds a certain kind of mindset in the insurance agents. This is how it's always worked, and this is how it's going to work. And they can't think of a better way until it's too late to see every other industry.
Yeah.
So,
and like
that's
for
important. But rest assured, there are insurance agents who are doing it, and those are the ones that are going to rise to the top very soon.
and yeah, I guess just as we're wrapping it up, like you don't have to take out that second mortgage shit, do the smallest AI transformation in your business or whatever. Like some of the simple tasks you can actually delegate to maybe whoever's like your CRM expert, or maybe just like some parts of your IT department. Like they can figure a lot of even basic things out to some extent.
Yes, the return on investment is almost instantaneous for AI. You're investing a very small amount of time compared to how much time you're going to free up as soon as you automate, and a very little amount of money considering how much revenue is just lost on the table when you don't agree.
So that just wraps up about all of our time here. Ryan, it was a pleasure having you on today. Great speaking with you. Great having you give us some more info to start 2026, with a blast. And if you guys would like to see Ryan in a future video,
I'd love to. Thanks for having me.
But leave a comment down below on any questions you have. I'll pass some of them over to Ryan. We'll make sure to answer them in a future video if needed. And yeah, just drop a like on this video. Thank you for watching all the way until the end.